Morning, Steve Free in Chicago with the morning grain comments. Well, it's Friday, and overnight we had some events in the Middle East that escalated tension there. Stock market's going to open up lower, the dollar's higher, crude's higher, and so we'll see how that impacts the grains. Grains are lower overnight. I think yesterday two things happened. Number one, when we got the 960 in March beans and 391 in March corn, there was farmer selling. And I think that was a good thing. It's a new tax year, and so I think farmers took advantage of this rally. We also saw that because of that, the market kind of turned around and traded near its session lows, which gives us kind of a negative technical picture. And so I think two things are going on right now. Number one is that when we might see some long liquidation in those markets where the funds are long. And number two is the farmer selling may have offered some pressure. Brazil weather looks good. Right now, southern parts of Argentina is dry, and I think they need some rains down there. Obviously, the headlines in Australia are unprecedented as far as conditions down, dry conditions down there. U.S. 6 to 10 day calls for normal to above temps and normal to above rainfall for most of the Midwest, and some flooding rains in the southeast part of the United States. I think the next big thing that we'll be looking for as far as U.S. data is concerned is the January 10th report. We're expecting to see the USDA say that the corn crop is maybe 60 million bushels smaller than the November estimate, beans maybe 15. So that's kind of a non-event unless the USDA gives us much lower numbers. D1 corn stocks 11.6 billion versus 11.9 last year. That's adequate and could offer resistance above the market despite the lower crop. Soybean a little over 3.1 billion versus 3.7 billion last year, and that might offer some support in the bean market, especially if farmers decide not to sell, waiting for news about China buying U.S. soybeans after they sign the trade deal. Wheat stocks a little bit below 1.9 billion. Last year was 2 billion. So again, kind of a non-event there. I don't think the farmers are big sellers right now, but above this 560 area for new crop, I think they would be big sellers of wheat. I think that's a good price for 2020 wheat if we have normal crops. And winter wheat acres probably 30 million versus 31.1 last year. A little bit of drop in acres because of at the time there might have been some dry conditions. There also might have been a little bit lower prices than what we've seen rally since the September lows. We've got the funds right now. We estimate are long 37 wheat, short 78 corn, short 23 beans, short 26 meal, and long a record 130,000 contracts of soybean oil. So I think that there might be a chance that the funds continue to cover short positions into the USDA January 10th report. The signing of the January 15th deal means that there'll be a 30-day implement period, and then China could start buying U.S. ag goods, but they're not going to say what they agreed to buy. So we're going to have to live on export sales report weekly basis to see, what they're buying and when they're buying. We expect today's export sales to be 250 to 800 wheat versus 715 last week. Corn between 300 and 715 versus 625 last week, and beans a low guess of 350, a high guess of 1 million tons versus 736 last week. So we'll see what happens today as far as market is concerned. Could be some long liquidation because weak technical signals, farmers selling, going into the export sales report, and all of the noise in the outside markets. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.